Morning, this is Dr. Craig Markson, and what you see before you is a correlation table of non-equity exchange-traded funds and their relationship to the S&P 500 as measured by SPY. So the data set here is from 9/29/2025 to the last trading day, which was on November 28th, 2025. So it's 2 months worth of data. You see on the top here, the independent variable, as I mentioned, is SPY. The dependent variables are on the far left column. SHY is a short-term government note ETF, which pretty much tracks the 2-year U.S. government note. UUP is an exchange-traded fund which tracks the dollar. USCI is an exchange-traded fund which tracks commodities. FXY is an exchange-traded fund which tracks the Japanese yen. FXZ is the euro currency. FXF is the Swiss franc. TLT is a long-term U.S. government bond fund. GLD tracks gold. GBF is a credit fund. IBIT tracks Bitcoin. HYG tracks a high-yield corporate bond fund based in the United States. USO is oil, and VXX is the VIX. So the variable on the left that has the strongest correlation with SPY, or the S&P 500, is the VIX, and the VIX accounts for 58.01% of the variance on SPY. That is the strongest correlation. Please note it is an inverse relationship. So as the VIX or VXX goes up, SPY will go down by 58.01% of the variance. The variable that has the second highest correlation are commodities. That's USCI over here, which accounts for 21.69% of the variance on SPY here. This has a positive relationship, a positive correlation. So as USCI goes up in price, so will the S&P 500. And then again, once again, the VIX at the very bottom here, highlighted in yellow, has the strongest relationship with the S&P 500. So what I did was I ran a multiple regression analysis with the independent variables being the VIX as measured by VXX and USI, which measures commodities. And here is the multiple regression analysis. I'm going to make this a little bit bigger so you can see. So one thing here at the very bottom here, the p-value. So we want to see this being less than 0.05, because then we can say that what's happening is statistically significant and not happening just due to chance. So that holds. The overall model is significant because, again, it's far less than 0.05. And the R-square percent, the model accounts for 62.48% of the variance on SPY. Here is the regression formula. So SPY, or the S&P 500, equals negative 0.18218 times the price of the VIX, or the price of VXX, plus 2.221054 times the price of USCI, plus 599.6797. I will leave this up for a little bit so you can write down the formula. Also, please take the time to read my disclaimer. And also, when you have a chance, please like and subscribe to my channel to receive the earliest copies of my videos. Thank you very much, and enjoy the rest of your weekend.